Have you ever wondered why savvy investors often put their money in commodities? Welcome to the alluring world of commodities investment, a field that, while complex, can prove to be a goldmine when navigated correctly. We're talking about a world where resources like gold, oil, and wheat become more than just physical entities. They transform into valuable assets, playing a pivotal role in the global economy. Commodities investment isn't just about the thrill of watching market trends, it's about understanding the intricate dance between supply and demand, and the many factors that influence them. From geopolitical tensions to climate change, many elements can sway the value of commodities, making this form of investment a fascinating endeavor. So, why should an investor consider commodities? What benefits do they bring to the table? The answers to these questions lie in the heart of this captivating world. Stay tuned as we delve into the distinct benefits of commodities investment. First up on our list of benefits is diversification. Picture your investment portfolio as a buffet of financial instruments. Now, diversification is akin to having a variety of dishes on your plate. You wouldn't want to fill your plate with just one dish, would you? Similarly, in the investment world, you don't want to put all your eggs in one basket, but why diversify, you ask? Because it helps spread the risk. If one sector of the market underperforms, other sectors may perform well, potentially offsetting losses. Diversification is a strategic way to maximize returns while minimizing risk. Now let's introduce commodities into this buffet. Commodities are unique in that they often move in opposition to stocks. When the stock market is down, commodities like gold, silver, or oil often rise. This inverse relationship offers a hedge against market volatility and can act as a safety net for your portfolio. Investing in commodities can give your portfolio a boost, not just through potential profit, but also via diversification. Commodities can help smooth out the rough patches and improve the overall health of your portfolio. So you see, commodities aren't just about gold bars and oil barrels. They're about giving your portfolio a balanced diet, a mix of assets that can work together to withstand market volatility. So with commodities, you have a chance to spread your risk and potentially increase your overall returns. The second benefit we have on our list is inflation protection. Now, in the world of finance, inflation is a term that signifies a general increase in prices and fall in the purchasing value of money. It's like a ghost that haunts every investor's portfolio. But here's where commodities come in as a knight in shining armor. You see, commodities have a unique relationship with inflation. As the cost of goods and services rise, so too do the prices of the raw materials that create those goods and services. For instance, if inflation causes the price of bread to rise, it's likely because the cost of wheat, a key commodity in bread production, has also increased. This means that when you invest in commodities, you're essentially buying a piece of the inflation puzzle. As inflation rises, the value of your commodities investment could also rise, potentially protecting your purchasing power. It's like having an insurance policy against the rising costs of living, but remember, while commodities can offer inflation protection, they are not immune to market fluctuations and other risks. It's always important to consider your financial goals, risk tolerance, and time horizon before making any investment decisions. So, the next time inflation is on the rise and you're looking for a way to protect your hard-earned money, think commodities. They might just be the perfect shield you need against the creeping ghost of inflation. In essence, investing in commodities can be a smart move to safeguard your portfolio against the eroding effects of inflation. The third benefit is the potential for high returns. In the world of investment, commodities are often seen as a high-reward playing field. This is largely due to the dynamics of supply and demand. When supply tightens or demand surges, commodity prices can skyrocket, offering investors significant returns. Consider gold, for instance. Its price has been known to surge during periods of economic uncertainty, or oil, which saw its price explode during periods of geopolitical tensions. And let's not forget about rare earth metals, whose prices have soared due to increasing demand in technology and renewable energy sectors. But remember, with great potential returns also comes great risk. The same factors that can lead to significant price increases can also lead to dramatic price drops. So it's essential to manage your risk and invest wisely. While there's no guarantee, the potential for high returns is certainly a compelling reason to consider commodities investment. The fourth benefit is the accessibility of commodities. In the world of investing, accessibility is paramount. The commodities market opens its doors wide for individual investors, making it a truly democratic space. There are myriad ways for you to get involved. For instance, futures contracts allow you to agree today on a price to purchase a commodity at a future date, giving you the power to speculate on price movements. Exchange-traded funds, or ETFs, offer a way to invest in a basket of commodities, spreading out your risk. But that's not all. You can also invest in the stocks of companies in the commodities sector, riding on their success as they unearth, produce, and distribute these valuable resources. Each of these investment paths offers its own advantages, and you can choose the one that aligns best with your financial goals and risk tolerance. With such accessibility, commodities investment can be an achievable strategy for many investors. The fifth benefit is the potential to capitalize on global economic growth. Let's dive in. As economies around the world flourish, the demand for commodities naturally tends to rise. Why, you may ask? Well, it's because as economies grow, industries expand, and with industrial expansion comes an increased need for resources. Think oil for energy, copper for construction, and grains for food production. Now, this is where it gets interesting. As an investor in commodities, you're not just investing in a physical product, you're investing in the global economic engine that powers growth and development, and as this engine revs up, the demand for commodities surges, potentially driving up their prices and your returns. But there's more to it. When you invest in commodities, you also gain exposure to fast-growing emerging markets. Many of these markets are rich in natural resources and are major producers of commodities. Think about countries like Brazil, a leading exporter of soybeans, or Russia, a global powerhouse in natural gas. As these economies grow and their industries expand, they produce and export more commodities. Now let's connect the dots. When you invest in commodities, you're essentially investing in the growth of these emerging markets. And as these markets grow, so does the demand for their commodities. This increased demand could potentially lead to higher commodity prices, translating into higher returns for you as an investor. So, what's the bottom line now? Commodities investment isn't just about diversification or inflation protection. It's about tapping into the global economic growth story. It's about riding the wave of development in emerging markets. It's about capitalizing on the increasing demand for resources as industries expand worldwide. In essence, commodities investment is a way to participate in the global economic narrative, to be part of this worldwide story of growth and progress. Through commodities, you have an opportunity to ride the wave of global economic growth. The sixth and final benefit is the tangibility of commodities. You see, commodities are not just numbers on a screen or abstract concepts. They are actual physical goods. Grains, metals, petroleum, these are things you can touch, feel, and even consume. They have intrinsic value. This tangibility brings a unique advantage. In the world of investing, there's something comforting about knowing that the asset you own has a physical presence. It's not just a promise or a concept. It's something real. This sense of solidity, of concrete existence, can provide a sense of security, especially in times of economic uncertainty. When the stock market is volatile, when currencies are fluctuating wildly, commodities remain. They are still there, still real, still valuable. Whether it's a bushel of wheat, a barrel of oil, or a block of gold, these assets have a fundamental value that is not as susceptible to the whims of the market. This isn't to say that commodities don't have their own risks or price fluctuations. They do. But the nature of these risks is different. The value of a commodity is tied to supply and demand, to real-world factors like weather patterns and political stability. These are things we can understand and predict to some degree. Furthermore, commodities often perform well during periods of inflation. When the value of money decreases, the price of goods and services tends to rise. This means that the value of commodities often increases during inflationary periods, providing a hedge against inflation. In a way, investing in commodities is like investing in the world itself. It's a bet on the fundamental needs and desires of humanity. People will always need food, energy, and materials. The demand for these goods is not going anywhere. So if you're looking for an investment that offers a sense of solidity, a hedge against inflation, and a connection to the real world, commodities might just be the answer. With commodities, you're investing in real, tangible assets, something you can touch, feel, and even consume. So those were the 6 key benefits of investing in commodities. Let's take a quick recap. Diversification, a strategy that can help spread out potential risks by not putting all your eggs in one basket. Inflation protection, a shield against the eroding power of rising prices, and a way to potentially keep your purchasing power intact. High potential returns, the chance to make significant gains when markets move in your favor. Accessibility, the ease of investing in commodities regardless of where you are in the world. Then we talked about global economic growth, how the demand for commodities often rises with the world's economy, offering opportunities for investors. And lastly, tangible assets, the comfort of knowing that your investments are backed by physical goods. Remember, every investment comes with its risks, but with careful planning and understanding, commodities can indeed be a worthwhile addition to your investment portfolio.